Hello and welcome. You're tuned into Market Fatafat on ET Now. I'm Shrishti Sharma and with me today is Cheryl D'Souza. And viewers, this is the show where in the next 1 hour we're going to be highlighting all the buzzers in trade right now. We will connect with our technical expert for today and also our researcher in a short while. But before that, let's have a quick look what the markets are up to. So Sharon, the last time we interacted or we anchored around 11ish, the markets were actually in the green. But in the last 1 hour or so, seems like the auto stocks are shifting to different gears, and it's the Nifty Auto Index all-time high.
Absolutely, they are shifting gears is what you could say, because if you see when the markets had kick-started for trading session, Maruti, Tata Motors were among the top gainers on the Nifty, isn't it, Shrishti? Now it looks like the gear is shifted from 2 to 3, now is going to 4, because you have Maruti Suzuki, which is the top gainer on the Nifty at this point in time, seeing gains in excess of about 4% as we speak, followed by Tata Motors as well, which is seeing gains in excess of about 2%. So these two are the top gainers on the Nifty, thereby leading good gains for the auto index. You also have Bajaj Finserv, Hindalco and M&M among the other set of gainers, while on the flip side, if you look at it, you have Cipla, Divi's Laboratories, ONGC and L&T that are losing at this point in time. The advanced decline ratio, there has not been any shift in the way how the advanced decline ratio has been panning out since the word go. We are still having that slight tilt towards the losers, but the markets are holding on to good gains. In fact, fresh record high levels in today's trading session, Shrishti.
All right, that's how the markets are panning out at this point in time. But with this, viewers, let's move on and let's connect with our technical expert for today and also get our researcher on board. We have Gaurav, who's joining us on the research side, and as you can see on the screen, Rajesh Palviya from Axis Securities is also with us. A very good afternoon, gentlemen. We will come to you, but before that, let me highlight the first stock that is in focus, and that is PB Fintech. Because today, as we got you the exclusive news flow on PB Fintech, where our reporters did get the news around that the company is exploring to enter or foray into the healthcare space. And on that, Bernstein has come out with a note, so let me flag that off, where they are saying that PB Fintech is talking about the backward integration with the hospitals. The founder seems to be convinced this is the way forward and seems to be working towards this over the last year. Now, a distributor looking to work with hospitals to improve the patient experience, thereby making PB the preferred health insurance distributor. And if that pans out, PB Fintech would become more dominant in the health insurance distribution market and also help the health insurance along the way. Now, investors bought into the PB Fintech story for its high growth, strong business and its cash generation. Now, some may look at the backward integration as a meaningful shift from its capital light business model, and this seems to be waiting on the stock for now. What you're seeing is that because the company, maybe if they enter into the healthcare space or the hospital division, that could not be asset light. It could impact their financials, and maybe one of the factors that the stock is in deep red right now.
Absolutely, the stock right now is in red. In fact, it's been in that territory or that zone for the last 2 to 3 trading sessions as well, Shrishti. So that's PB Fintech. In fact, let's keep the spotlight on PB Fintech, because to understand what if this move actually comes about, what would it mean for the company and the sector as a whole? We spoke to Rahul Jain of Daulat Capital. Let's hear out what his views.
As we don't know the precise amount of quantum that they would like to deploy here, it would be difficult whether that investment is really meaningful in their context. One thing is clear, that their cash requirement in the current business has reduced meaningfully. The cash burn is almost near zero. I think the valuations were already overstretched, and any such effort only makes it difficult for people to play into it. So we currently have, a view which is negative given the high valuation. So this only adds up to the problem.
All right, let's shift focus then. Let's talk about Maruti Suzuki. And like I mentioned, Maruti Suzuki among the top gainer on the Nifty in today's trading session. One of the key reasons why you have Maruti Suzuki seeing that sort of a jump is because reports from wire agencies, quoting sources, mentioned that Karnataka state is planning steep tax cuts for hybrid cars. So on back of that, you've seen a sharp jump come about for Maruti Suzuki. As you know that the dominance that Maruti Suzuki has in that particular segment of cars. So you have the sources say that Karnataka state, now post the UP state news, you have the Karnataka state also could be looking at steep tax cuts, especially for hybrid vehicles. So on back of that, you saw the stock see a biggest jump since around July. The jump we saw in the stock price, because that's the time when you had Uttar Pradesh state also go ahead with such a move. So on back of that, Maruti Suzuki, keep an eye out on this one.
All right, that's why we are seeing excitement in Maruti. But let's shift focus to the pharma space then. And Rajesh, very good afternoon. Thank you so much for your time. Let's talk about the first stock that you're tracking, and that is Dr. Reddy's Lab. Tell us more how you're looking at this chart, this stock on the charts.
Good afternoon, Srishti. So, looking at the structure for Dr. Reddy, we have already witnessed some profit taking from its recent high, and now since last couple of days, the stock has formed a bottom and showing a sign of recovery from those lows. Accumulation activity has been seen in the stock since last couple of days. In this process, now again, stock manages to sustain about a 20-day moving average, which is aiding the near-term strength on the stock prices. Sector tailwind is also supportive. Pharma space is also on a buying side of the trade. So we believe that we can see a pullback in the Dr. Reddy from the current level, and possible upside target towards 6850 to 6900 we can see in the near term perspective. So one can look to buy this stock with stop loss of 6600.
Alright, so that's the view coming in on Dr. Reddy's. Let me take it across to my colleague Gaurav, who's waiting by patiently to tell us why Zaggle is in focus in today's trading session. Gaurav?
Well, yes, Zaggle is in focus, and there are two acquisitions that the company has now announced. The first one is that the company is going to acquire around 98% stake in Span Across IT Solution Private Limited. Now, the proposed acquisition will give company an opportunity to enter into new segment of employee-related business, and the cost of acquisition is going to be around 32 crore rupees. And the deal is likely to conclude in 45 days, according to what the company has presented on the BSE. Other than that, the company has also approved an investment of around 15.6 crore rupees in Mobileware Technologies for 26% stake in this company. Now, Mobileware Technology is a forefront of the digital payment innovations in India, and Zaggle would be able to leverage its expertise and make embedded payment experience solutions for esteemed clientele. Now, this will also create multiple use case through lending stocks, creating solution and credit card management services that Zaggle may provide to the customers. Now, there is no any timeline given by the company, but on the back of both these news, we are seeing some positive uptick in Zaggle. In the morning, we saw this stock was up almost by 4%, but now it has given up some of the gains, still up more than 3% today.
That's about Zaggle, but let's focus to TCS then. And Rajesh, that's the next stock that you are eyeing right now. And indeed, all these IT counters will be in focus on the back of the Accenture earnings. But before that, how do you see the setup for TCS? Once again, ready to move?
Yeah, sure. So definitely risk to reward is in favor to go long in TCS, as stock has corrected in last 2-3 weeks, and now stock is taking the support from its important support area, which is placed at around 42.30, 42.10 kind of level. And since last 3-4 trading session, we have seen stock is consolidating very narrow tight price range, which clearly shows that supply pressure is already absorbed in this stock. And I think stock is ready to give some pullback towards 4400 to 4450 kind of level in the near term perspective. So risk to reward is in favor. 42.20 should be your stop loss to buy this stock for upside target of 4400 to 4450.
Alright, so that's the view coming in on TCS. But let's shift focus. iPhone maker Apple has emerged as India's most valued smartphone brand, tipping the likes of Samsung, Vivo, Oppo as well as Xiaomi. What's the road ahead now coming in for the company in the Indian subcontinent? Let me take you across to my colleague Sumita Karir to understand more. Sumita?
Right, so Apple has emerged as India's most valued smartphone brand in the first half of 2024, and this is according to exclusive data that ET now has accessed. With this, Apple has established its market leadership, and Apple is closely followed by Samsung on the number second spot. So Samsung is India's second most valued brand according to market share data that we have access. So let me take you through the 2023 second half. In that period, Apple's market leadership stood at 23.6%. 25.6%, and that has risen now in the first half of 2024 to 25.9%. And Samsung's market share overall has dipped slightly from 2023's second half to 2024's first half. However, it's been able to maintain that second spot, and after these two brands, it's Oppo, Xiaomi. These two brands as well have been able to make gains. And India, remember, as far as Apple is concerned, India is a key part of Apple's manufacturing strategy. Apple's been betting big on India to diversify its manufacturing operations and is producing iPhone models 12, 13, 14, 15. And JP Morgan estimates that on account of Apple's diversification strategy to move away from China, India is expected to account for 25% of Apple's manufacturing capacity, and that could happen by FY26. In fact, according to Counterpoint Research, Apple exported 20% of India-made smartphones in 2022, and now the company is looking at expanding its production base in the country. It is looking at, according to several reports, it is looking at manufacturing iPads in India as well, and that, like I said, is a bit to diversify its operations away from China. In fact, Apple CEO Tim Cook also during the March earnings call said, and I quote, that we did grow strong double-digit in India, and so we are very pleased about it. It was a new March quarter revenue record for us.
All right, but with this, viewers, it's time to slip into a very short break in this edition of Market Fatafat. Don't go anywhere. Welcome back to Market Fatafat on ET Now, and let's keep it going with all the buzzers in trade right now. And moving forward, let's put the spotlight on the paint counters, because today Morgan Stanley has come out with a note on paint channel checks, where they say that the grassing saw limited sequential pickup in Q2, where the Q2 paint demand remained a little slow, while overall competitive intensity remained high. Now, the project business and the infrastructure demand started to improve sequentially, and there was a price hike of 2 to 2.5% across players in the month of July and August. Now, dealer competitive intensity remains high among the urban dealers, and competition from local paint brands remain high in the rural market. Now, discounting remains high as well, though at the similar levels that are seen sequentially. So all in all, there has been a price hike that the companies have taken in the last couple of months. They are sustaining those, but sequentially there's not much pickup that is seen in terms of the demand. But do note that we will be in to the festive season in some time from now.
Absolutely, and these paint counters will definitely be in focus, especially during the festive season. But let's talk about Vedanta then, Rajesh. Do you think this one is definitely in focus or in the spotlight for all of our investors right now? Because the stock has seen a sharp spike today and also seen good run-up over the last few trading sessions.
So, metal basket is shining, and Vedanta now managed to give breakout of its previous consolidation range breakout, and almost it's attempting to reach to the level of 506. That was the previous swing high of May 2024. I think looking at the data setup, long built up is clearly there on series in this stock. Weekly structure is very strong. We believe that this stock may extend its gain, and possible target towards 525 to 530 we can see in the continuation of this up move. So Vedanta could be outperformer from here onward in the metal space. So one can buy and accumulate with stop loss of 490.
All right, that's the technical take coming in on Vedanta. But Cheryl, let's talk about Tata Motors, one of the other top gainers in Nifty 50 today.
I like how we've switched the roles, because I'm talking about all the auto counters that are buzzing in trade, while you actually are the ones who does deep dive research in the auto space. But yes, nevertheless, yes, Tata Motors is in focus in today's trading session, because Jaguar Land Rover has planned to spend about £500 million, which translates to about $669 million. This in order to retool or make up one of its factories in London that is poised to start manufacturing electric SUVs. We all know that JLR, which is the maker of Range Rover as well as Land Rover vehicles, already invested about £250 million in the Halewood plant near Liverpool over the last 12 months, and the company has said that it will double its expenditure over the coming years, and reiterated that the facility will eventually be its first to go all electric. So the focus on electric SUVs and the fact that they are putting in money in a plant to go all electric, that's the reason why that is one of the reasons why Tata Motors is in focus.
And certainly the other reason you have already covered about the Karnataka government. But moving on then, let's talk about the banking space then. And from that, Gaurav, you have your eyes on IDFC First Bank as well as IDFC Limited. Take us through what's happening here.
Well, yes, both the counters, IDFC First Bank and IDFC Bank, both are in focus, and the reason being that the NCLT has now approved the merger of IDFC Limited with IDFC First Bank. So let's see how the process has started and how the journey has been for both of the counters. So it recently, when we talk about the first incidents, the process started in July 2023. After that, the announcement, IDFC Limited, when we talk about in December 2023, IDFC announced that the RBI had issued no objection certificate for the same merger. After that, we also saw that majority shareholders actually gave its nod to the merger to May 2024, and after that now the NCLT has now approved the merger. When we talk about the stock movement, ever since the merger news has started, we have already seen that both the stocks have been under pressure. In fact, when we talk about IDFC First Bank, it is down almost by 23% in the last 1 year, while IDFC Limited is down almost by 13%. But now that the news has come and now the NCLT has given the permission, when we talk about the stock performance, IDFC Limited is seeing some kind of upward pressure. It was up as high as 1.3%, but now it has given up some of the gains. But IDFC First Bank still under pressure. It is down almost 1/10 of the percent as we speak.
Alright, so that's about IDFC and IDFC First Bank. Watch out for both of these counters. But Rajesh, let's talk about M&M, one of the auto counters that is buzzing in trade. It has featured now in the Nifty top gainers for the day. Where do you see this one headed from here on? At the levels of 3,151, do you see further scope of upside?
Sure. So this is the third consecutive week where stock is, showing a higher high-low formation that clearly indicates that sustained buying action is taking place in this counter. Now stock is enjoying its all-time high trajectory. The way stock managed to view breakout of falling trend line on the weekly chart, we believe that this momentum can extend further, and 3250 to 3300 could be the next target for the stock in the continuation of this up move. So I think buy on dip should be the strategy in this stock, and very strong chart structure across all time frame. One can buy and accumulate with stop loss of 3100 and upside target, as I mentioned, 3250 to 3300 could be seen in the short term perspective.
Right, that's about M&M. But with this, viewers, it's once again time to slip into a very short break. Don't go anywhere. We'll be right back with more buzzers in trade right now.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.